Welcome to the Cash Flow Champs podcast, the show where we demystify real estate investing so you have the tools you need to gain financial freedom through passive investments in real estate. And now your host, Cash Flow Champs managing partner, Prashant Kumar.
Hey guys, this is Prashant Kumar from Cash Flow Champs. Today we are going to talk about what is multifamily syndication. There are really two questions. One is what is syndication, and second is why multifamily. Let's talk about what is syndication. As you know, real estate is an asset class where you hold the asset. It is a tangible asset, and it is always advisable to invest in a tangible asset than paper assets like stocks. The stock valuation can become zero very easily, but multifamily or a real estate asset always remains there. So in a single family environment, an investor will go buy a single family. They will manage the single families. They will take care of the toilet, tenants, and trash. They will get the rent. They'll pay the mortgage and some maintenance. And then in the end, they will get some appreciation. But the investor has to work on the property for the duration of that project. In a syndication environment, we pull the money from multiple investors. We buy a bigger asset. That bigger asset is managed by professional people, by professional property management companies. Lenders are watching that asset, and the investor gets part of the rent, like as if he would have gotten from his single family home. He would get part of the rent from this bigger multifamily project, and then in the end, they end up getting part of appreciation also. So in other words, investor end up getting part of the rent during the life cycle of the project, and in the end, they end up getting part of appreciation also. Most likely, they end up making more money because the overall asset is managed by professional people. As I said, professional property management companies and professional capital expenditure through a professional, construction management company. Professional accounting takes place. Banks are looking at the project. SEC is watching that no funky stuff is going on. So all in all, it is important to understand that for investors, it is a passive investment. Investor doesn't do anything. Investor has the life back to him. They have not signed up for a job. So all the busy professionals who are out there, if they invest passively in a syndication, they end up making a lot more money than they would make otherwise by buying these properties themselves. And there are many advantages of multifamily. Multifamily is an asset class where, it's a commercial asset class. You buy 200 unit apartment complex, and even if your occupancy is 90%, you are still getting the cash flow. But if you have a single family home, your tenant leaves, you do not get any cash flow from that property. So even at 95% occupancy in a 200 unit apartment complex, you are making enough money, which is distributed with the investors. So risk of getting no cash flow is not there in multifamily because you have predictable cash flow coming out of your property. You have predictable income, you have predictable expenses, so you have predictable net operating income. And anything after paying the mortgage is distributed back to the investors. Now, the second point is basically in a value-add environment, when you have some problem in the property, the operator goes in and the operator tries to put some money in the property. Let's say, to give an example, operator puts $5,000 per unit in those 200 unit property. They end up putting $1 million. But by putting that $1 million, let's say the rent goes up by $100 to keep it simple. $100 per unit, meaning $1,200 per year goes up. $1,200 goes up, and if the cap rate is 5, the valuation of the property goes up by 1,200 divided by 0.05, that is $24,000. So the valuation of the property goes up just by putting 5,000 in a unit. The valuation of the property goes up by 24,000. And if you are putting that money, $5,000 in 200 units, 5,000 multiplied by 200 is 10,000, 100,000, 1 million. By putting that much money 24,000 multiplied by 200, it's 2.4 million. Valuation of the asset goes up by 4.8 million. Basically, by putting $1 million in the property, by increasing the rent by $100, the valuation of the asset goes up by 4.8 million. That is how multifamily or a commercial real estates are evaluated. $100 means in a 5 cap market about $24,000 valuation increase. So 200 unit apartment complex, the valuation of the property goes up by 4.8 million. So it is so easy to improve the valuation, which is delivered back to the investors in a multifamily environment. So I explained syndication. I explained how multifamily properties are evaluated. And on top of it, it is hands-free. For limited partners, it is hands-free. There's one bigger thing here, the tax code. The tax code in commercial real estate are written in a way that a lot of tax benefits are given back to the investors. That could mean that our tax liabilities can go down considerably in commercial real estate. I'm not a CPA, but I'm just giving you some benefits of why multifamily syndication as compared to other asset classes. Why people, in recession, what happens? People do go back and they live in the apartments, they sell their homes and they go back and live their apartments. So it is a recession resistant asset class. So we are in this business of multifamily syndication. We are cash flow champs. Our website is cashflowchamps.com.
Thank you for tuning in to this week's episode of the Cash Flow Champs podcast. Cash Flow Champs partners with busy working professionals and entrepreneurs that want to build and maintain generational wealth through real estate. Visit cashflowchamps.com to learn more about us.